Hello, everyone. All right, let me see. I'm gonna start a little early. There we go. All right.
Hello.
Starting a little early for everyone. One second, let me just launch our Discord event as well, and we're gonna rock and roll. One sec. All right, so this is a lot of exciting news. I was talking about it last week for those who were on our Discord lives, which I didn't do YouTube lives. So one second, let me. All right, welcome our Discord guys. I'm live streaming on YouTube as well. One sec, let me just do the screen, and there we go. All right, so I won't be able to monitor the Discord chat, but anyway. CPI data, baby. So we had a trifecta. What's a trifecta? The trifecta is we had a bad NFP numbers. When was it? First Friday, a week ago. Last Friday, right? We had bad NFPs. Then we had shitty ISM numbers. Not last Friday, Friday before that. Last week we had bad ISM numbers. And today we have shitty CPI. Shitty in a sense that it's lower than expected. And what does that mean? For those who were with us on on our Discord lives last week, I was explaining to you if the CPI is going to come in lower, and my suspicion was that it was going to come in lower, then you're going to have three essential data points for Fed now that cannot ignore. And the Federal Reserve cannot ignore those things. That means that they will have to lower interest rates. And if they're going to lower interest rates, this is going to be bullish, and this is what you're seeing right now on every single. It's going to be dollar bearish and everything else bullish, risk on essentially, right? So immediate spike in all the asset classes. All the asset classes spike. You can watch futures. You can watch. It doesn't matter what the fuck you watch, right? So S&P 500. Let's look at the daily. This is the all-time high. We're approaching all-time high. We're going to take it out. NASDAQ already took out its all-time highs. US 30 is a little far away. But as you can see, US 30, the Dow Jones, you have triple top, some kind of ugly inverted head and shoulders. But where is the liquidity? You always have to ask yourself as a trader, where are the majority of stop losses? How many jerk-offs have stop losses here above this area? Pretty much a shit ton of them, right? If you were to always think of it when you trade as if you were a market manipulator, if you were the guy who is fucking you, right, out of your money, what would you do, right? Where would you take the stop losses? Obviously here, and here, right, above these highs. All the jerk-offs put their stop losses. People who are shorting, who read the FUD news, who listen to CNBC, Bloomberg, and read all these stupid fucking articles. The world is coming to an end, right? It doesn't matter if the world it might be coming to an end, it might be getting shittier, but it doesn't fucking matter because you're a trader. You have to understand the fundamentals of how markets work. And one of the primary factors that drives the markets are interest rates, whose data we've got today, right? So the CPI comes in less than expected. That means that the inflation expectations are lower. So if that happens, the Federal Reserve will be forced to already, again, with the NFP, ISM, and CPI inflation data coming in lower than expected, there's no point of them keeping the rates high and keeping a lid on it. They can lower interest rates and stimulate the economy a little more. So Trump has been adamant about replacing Powell and saying he is late, always to the party, and he's right. Federal Reserve has been always motherfucking late. I've been in this business for 20 years, and when I was in college and high schools, I remember when I was dabbling in this shit, there was not a single time in the history of Fed where they were on time. They're always behind the fucking curve, always behind, right? Maybe that's by design. We can have the tinfoil hat. Obviously, another time conversation, but not here. But the point being is they are late, and markets know that, and this is why this is the initial reaction is a risk on, because they know that now Fed will have to act. So the bets, the probability, again, it's not 100%. Nothing is 100% in this business, but you deal with probabilities, and you're watching. You're looking at what's going to happen with the probability of the rate hike. So the September rate hike probabilities just went up tremendously, because there's no more excuses that Fed. I mean, they can always come up with other bullshit excuses, but now the evidence shows that they're very running low on excuses, so to speak, right? Because now you have a 3 big data points in a row pointing to a slower economy, and because of higher interest rates. Because if the higher interest rates, then the cost of borrowing money for businesses is higher, so they borrow less, so they expend less. There's less expansion in the economy. When the money is cheap, everybody give me, right? If I'm standing, on a proverbial street corner and throwing out $100 bills to everybody, there's going to be a pile of people around me, right? Same thing Fed does for the businesses, banks, and all of that. It's a retarded analogy, but you get the fucking point. So, with that said and done, now Fed is kind of forced to admit that, okay, maybe we are being a little bit too conservative with the rates, and they might be inclined at least to either cut it in September or definitely October. Okay? With that said and done, what does it mean for the markets? And how do you trade that? Well, the best type of trading happens when you have an alignment between fundamentals and technicals. So if the fundamentals are now saying Fed will cut interest rates, thus the economy will expand because there's more business activity, thus the earnings of the companies will go up. This is why the stocks most likely will go up, right? And now it's also, that's fundamental. Now if put on your thinking hats, where is the trend? I mean, even a blind retard should be able to, sorry for the, you should be able to see this, that this is, if it's go from this corner to this corner, it's going fucking up, right? If the trend is up, then even the lucky ones like you can understand, or unlucky ones, that the trend is up, you buy the fucking thing. Oh shit, I closed it by accident. Fuck. 1 second. Sorry guys. Sorry. Now I'm being retarded. There you go. That's what I get. 1 sec. Let me just get it back. Shit. There we go. 1 sec. Share the screen. Oh God, come on, faster. There we go. And OBS. Trading. There we go. There we go. All right. So if you have now the alignment of technicals which are up and fundamentals that are also pointing up, the probability of what you should be doing is definitely not sell all-time highs of the stock market. Okay, that's probably the dumbest thing. I mean, anything can happen in the markets and blah blah blah. But you have to trade with probabilities. The probability lies that if Fed prints more money or lowers interest rates, which with more money being available for businesses, the businesses will expand, and this will drive the stock market earnings upwards. Thus, markets are reacting to this news, and people are going proverbial risk on in the risk assets like NASDAQ or pick a currency. You know what I mean? Spikes in all the dollar denominated currencies, right? Because now if the lower interest rates, Bitcoin is also pumping probably, right? Let's see, take a look at Bitcoin. Yeah, Bitcoin is a 120-ish pump, right? ETH is finally showing some signs of being alive. We're still not at the all-time highs, but not far off, all right? So probably buy the dip, maybe a little lower. Again, retest. Wow, I didn't even see this one. Check this out. I wasn't trading. I was on vacation for the 2 weeks. So there you go. What a nice breakout, retest, and now we're getting continuations, right? I've been talking about breakouts, retest, continuations ad nauseum. We almost had the similar situation here. There's a little shy off of it. But there you go. To the fucking T. Right? Anyway, breakout, retest, continuation. That was the what we've been discussing last YouTube live series before I went on vacation a month and a half ago or whatever it was. Anyway, so what do? All right, so obviously you don't want to chase anything here. Now you understand that the trend is up, the technicals are up, fundamentals are up. Okay, what do? Well, you don't have to buy it here. You might, it might keep on running, but we don't chase. You have to wait for the pullback because there's always a pullback. You don't need to be chasing here just to catch this. You can wait for this, a breakout. There's a breakout, a little retest, and continuation. Okay, you'll get another wave. However this shakes out, there's gonna be a profit taking by the early crowd. Okay, and that's when you're gonna be offered a dip to buy once you start seeing a bounce. Okay, let it, especially today, because Nasdaq is breaking out all-time highs. Right, we popped it, but we didn't close it. If we close above it today, like somewhere here in this area, then there's going to be a pile of traders who will, the breakout traders who will further drive this market up. So today's close in the stock market is paramount. The importance of it is insane, huge, or as they say now, huge, right? So so yeah, I mean, there's not much to talk about now. You just buy silver, buy gold, Nasdaq, S&P 500. Using your trading styles, right? So for example here on let's whatever Nasdaq, obviously this is a price inefficiency. I don't know how far it's gonna run, but then we're gonna have market open in about 40 minutes, so the cash market will start reacting to this, and that's gonna be that's gonna be the quite telling of the price action. So as traders we react, right? Price action kind of shows us what's going on in the market, and then we go with the flow and we join the party, the winning team. So when the cash market opens up, there's going to be a bunch of, for first 5 minutes there will be a lot of wiggly diggly because of the market execution of yesterday's orders, overnight orders. All right, and then you're gonna have a directional move. And trust me, because now you have pretty much nothing interesting going on for the rest of the month in news-wise, I think this will be the catalyst. Now that we had, like I said, NFP, ISM, and CPI data come in lower than expected. This will set the trend for the next 2 weeks. So even if you don't trade today, for the next 2 weeks, you know the direction of the markets. Okay, so you just have to pick, again, unless something drastically changes, the picture changes somehow. You one sec. You know what to do. You need to just wait for the a little bit of a pullback and buy the dip. Don't chase anything because you don't know. You're literally at one of the greatest resistance. At all-time high resistance right now, right? So if it closes above it, trust me, there will be people who will pile into driving this market up. You'll have plenty of more opportunities. Okay, kind of like you did here, right? You see, this was the previous all-time high. Very similar picture, honestly, just on a larger scale, right? You had people doom and gloom, shorters, right? We took it out. We couldn't close above this, as you can see. One second, let me just clean this up so I don't have garbage on my charts. Right. You see this candle right here? See how it exactly closed at the line, right? So it didn't have enough oomph to penetrate, right? But after you had to close above the all-time highs, you know, you see what happens, right? This happens next, right? This, and we essentially have same thing, but on the hourly. This is just a fractal of larger picture. It's the same shit, you know, same absolute fucking shit. It's called the fractal, right? The fractal nature of the markets. So the fractal is repeating itself. That's why you don't need to buy it here. Just wait for the wait for the close, daily close, hourly close at least, and you will see that the markets will pile on into those longs. If we don't close and we start drifting lower, it's going to be very bad news, because you're gonna have a news failure essentially, and that's when you have news dictating one thing, market is doing the opposite thing. That's usually you should join that trade as well, because you have to go against. There's a reason why markets are doing the opposite of what it's supposed to be doing. Again, all you're doing is reacting. That's why I'm saying don't buy now. The probability lies that we should continue upwards momentum on gold, on stocks, and the USD is probably gonna go. Let's take a look at bonds. What bonds are showing us, because that's the yield, right? So this is the yield. It dumped immediately. So it dumped because the markets are betting that for the Fed, especially short interest rates, that are very sensitive towards what predicting towards what Federal Reserve will be doing, right? So they're showing that the markets are betting essentially that the interest rates will be lower for obvious reasons, like I said, because the Fed will now can't ignore the fact that the inflation data that they were adamant about keeping at bay is now coming in softer. That means they can be a little more laxed with their policies. 1 second, we're gonna have 1 second. I'm gonna have a 9 o'clock crowd, since I wanted to start this at 9 a.m. We started a little early. In 2 minutes, we're gonna have a big influx of friends joining us. Anyway, so, oh wow, there's a lot of questions, guys. I won't be able to answer a lot of questions because I'm on 2 live streams. Wait, is 1 second. A second. Is my chart up on YouTube? Just confirm, please. YouTube crowd, can you type yes or no if you see not the chat, the chart? Can you see the yield? Okay, all right. Just making sure. All right. Analyze the gold. Gold, let's see, should be going up. So weekly, so I'm clean it up. We didn't do shit for the whole last week. It was just anemic. I traded long. We had this ending diagonal. We crapped out at 50% retracement now. So gold, again, everything denominated in US dollar should go up against the US dollar. Why? Because the interest rates will be forced. The yield on the US dollar will be lower. So let's say if before you were getting for the simplicity of the argument, you were getting 10%. And now it's 8%, but other currencies are still paying 10%. You're gonna pull money out of the US dollar and you're gonna put it to those that are still paying you higher, correct? Right? Why would you want to lose money, right, when you have the opportunity? So the money chases the yield. The yield is how much money the money can make on the money. Okay, so that's how you should be thinking. Fundamentally speaking, right? Your money, the money will always go to places which are the safest, but yet offer the highest yield, the combination of both, right? So when the world is doing fine and everything is hunky-dory, usually the money goes into more riskier assets, hence the risk on. So you go to third world countries, this, that, because they pay the highest yield essentially, right? Because in whatever pick a third world country, their interest rates 15%, 20% versus 5% in United States or Europe. Okay, so you can get, and if their rate differential you can hedge the rate differential. You essentially, instead of making 5%, you can just make 15%, just like that. Okay, and that's what hedge funds and fund managers do. Essentially, that's their job, make money on money, right? So the flow of money is what we're analyzing right now, and oh wow, more people joining. Okay, so the flow of money is, wait, what time is it? Yeah, 9:01. All right, for those who just joined, briefly, we've briefly, I'll just repeat myself. We had a trifecta of news. From bad NFPs to bad ISM numbers to now lower CPI will force Fed to they cannot ignore this data anymore, and they'll more likely than not will be forced to admit that they need to cut interest rates. Okay, so markets are betting on the fact that the interest rates will be cut, and this is why you got all the last hour spikes in all asset classes. Okay, so gold or NASDAQ or Eurodollar should be, this is why you got those spikes. Now, the news usually, news trading usually has the initial move, then profit taking. This is what you're seeing right now in Eurodollar, for example. This is profit. So the algos, they executed the news before you even could read the news. They already knew the news. They already executed it because it's nanosecond, and they get the data before you get the data. Okay, so they already executed, and this is them exiting the trades. Okay, they don't need to be. That's it. Now the normal human traders will start joining. So after you get this initial reaction, the follow through. I mean the profit taking. Then you're gonna get a follow through. So the follow through, if we take out these highs or these lows, will be quite indicative of the price action probably for the remainder of the week, if not for the remainder of the month. All right, so so that's pretty much the quick and dirty summary. Fundamentals are now aligning with technicals. This is why BTC pumped. This is why ETH pumped, right? Whatever you want to look at, because everything is priced against US dollar. So US dollar is going down. So it doesn't matter which asset class you analyze. It's going to be as a rule of thumb. Obviously, there might be some currencies that it's not as evident, right? So the dollar, obviously, this is reverse. So dollar went down against the Swedish krona, against the even the ruble, whatever, not Norwegian krona. It's the same rate. It doesn't matter what the fuck you look at, even the fucking Mexican peso. All right, it doesn't matter which one you look at. The initial reaction was this. And by the way, if you like trading news and you don't like consistency scores, check out the new pro accounts on FundingTraders.com. All right, we've eliminated consistency score, eliminated news trading rules. Do whatever the fuck you want. You want to blow your accounts? Knock yourself out. We got sick and tired of trying to put constraints and explain to people that you shouldn't be risking more than 0.5% or 1% on this and that, and micromanage you guys to make you into better traders. We said, okay, you want the account which says fuck it? There is now an account called fuck it. In my language. In reality, it's called the pro account. So you want to trade like a cowboy, and blow accounts. Good for you. And if you can manage to make money and consistently, and you get a few payouts, we're definitely gonna take notice, and we're gonna put you on the. We're gonna start copying your account and make money over you. So either way, we win. Okay, and you. So for those who are professional enough to risk manage themselves correctly, are now will be able to not have somebody breathing down their necks. Okay, no problem. We also obviously have the older type of accounts where if somebody is new to the business, and they probably need some constraints and rules so they don't go so they don't just keep blowing accounts needlessly. Okay, so they actually, because they need structure, like a child, right? If you're a professional, if you're an adult, You don't need as much supervision as a 5-year-old who doesn't know, shit from fuck and just running across the highway and thinking it's not gonna get hit and get run over. So so we have the don't become a roadkill accounts, and I want to drive aggressively on the highway type of accounts now. So mazel tov, whatever you enjoy yourselves. Do whatever. Pick whatever, whichever one works for you guys. Okay. And obviously, there's the discount. Since we're introducing this new account, we're gonna give you this account at 30% off. I think the promo is in the on the YouTube channel, and for those who are not on Discord, check the general chat or the news, whatever, one of those channels where we update with the promo codes. It's PRO30. The code is PRO30, and and enjoy. Listen, you want to be a cowboy, be a cowboy. And now is going to be a very interesting time because you can make a shit ton of money right now, knowing what I've just explained to you with the fundamentals and technicals aligning. And and today's paramount. Like, I don't give a fuck what you're doing at the end of the day. You should see the close of the market at the end of the day. If it closes above, you're gonna get this, just like it was here. You're gonna essentially get the same reaction, probably even quicker, because then the markets are literally saying, Fed, okay, enough is enough. It's time to cut interest rates, okay, and they will have to address this one way or another. So let's take a look at hourly. So buyers came in. Again, there is another possibility of news failure. We are here to observe the price action, and then we react to the price action. I don't know. There's no certainty in this business. That's what makes it so hard, right? You have to deal with probabilities, and you should be okay with both scenarios. You have to have a plan for both scenarios. Okay, so, but you said that the fundamentals and the technicals and the jerking off and yeah, okay, and all of this economic circle jerk just gives you a probability, and to build a scenario. You don't just trade. You don't just blindly put a trade on just because fundamentals and technicals align and blah 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 blah, right? Just because you think something is going to happen doesn't mean it's going to happen. And you always watch the market and market's reaction to the news. So that's why you don't jump in the fucking trade and you don't FOMO in like an idiot. You let the markets show you what they're doing. And the biggest show of what the markets will be doing will be either a close above or a failure on the news to close above, which will be quite telling. So if you're going to start seeing markets selling off, taking out these lows here today, for example, and on the closing basis, if you want to trade intraday, this is what I would do. I would wait either an hourly close here or an hourly close here. All right. Right now we are. This is obviously the range, right? And this is the equilibrium of the range, where we are right now. So your job is not to. You don't want to be caught in the middle of nothing. You have zero statistical advantage. You just have to be patient, okay? Because if you're gonna have a breakout again like this, a close above, you're gonna have a rally because the crowd, the big money, will see that okay, we have a all-time high close. Highly likely the price will keep on going up. Okay, so this is what you should be doing. You should be waiting for the markets to reveal its hand. And then you trade, okay? So don't and you build out scenarios for both types of possibilities. One possibility up, one possibility down. And I don't give a shit honestly which one will work out. I just have a possibility if it goes down or goes up, I will make money. That's what I'm here for. I'm not here to mentally masturbate like an analyst, because banks divide traders into traders and analysts. And analysts, they just circle jerk. They mentally masturbate with all the economic mumbo jumbo that nobody understands anyway, right? There's no such thing as experts in economy. It's all bullshit. All right, the experts, Federal Reserve, never been on time predicting dick from fuck. They never were accurate with anything. And these are the experts, right? So forget about all this mental masturbation. Unless you have money on the line, you're just spewing shit, mentally masturbate. Okay? So traders always get paid more than analysts for that simple reason, because they actually have to put money behind their thoughts, okay, and not just pontificate like the professor in college that never established business, but he teaches you how to be a businessman. The fuck do you know about being a businessman if you've never you never opened the fucking business? Same thing with analysts. They never traded. They never did whatever. They're doing the fucking Excel spreadsheet calculation bullshit nonsense. It's all fine and dandy, but it doesn't make you money. Okay? So, don't be an analyst. Don't be an asshole. Be a trader. And to be a trader, that means you react to what the market is showing you. It's and nothing else. And nothing else than that. Okay? Your job is to react accordingly to the price action that you're seeing on the screen. Now, right now what we're seeing is very simple. Like I said, it's calm before the storm. The cash market is about to open in 20 minutes. I'm not going to be yapping here for another 20 minutes, to be quite honest. I think I've told you all you need to know for today. Again, check out the new pro accounts. Do whatever the fuck you want account, as I call it. You've asked, we listened. No more consistency, no more news restrictions, no restrictions. Just you want to blow it, blow it. You know how to dance. You want to be not supervised. You don't want to be a child. Knock yourself out. Show us that you can trade without supervision, and we will back you up with more capital, and we'll obviously copy your accounts on a larger scale for us. Okay? So that's that, boys and girls. Again, watch for the news failure. It's a possibility. It's also be a trap. But right now, again, I'll give you the last one for the gold. This is gold. What do you see? We are in a range. That's all it is. It's a range. So if it's a range, wait either close or close. That's it. Right now, we're in the middle of the range. I'm not interested in doing anything. I'm not a range trader. I want to see price start running. I like to catch these waves, not be in this little fucking whatever the fuck this is. Okay, that's me personally. If you like to dick around for making 2 points here, 2 points there, knock yourself out. There's many ways to make money in the market, right? So you do you. But to me, see, this was the trap, by the way, early on. See, it didn't close. This was the range. We didn't have no closes. So can it dip? Yeah, it can dip more. Is it gonna close? Is the big question. Okay. And that's it. I'll see you all tomorrow at 9 a.m. Tomorrow we're gonna do 9 a.m. Okay. But today, because of the news, it was very important. I started early, so thank you all for joining. I'll be doing, for those on Discord, I'm going to be doing the Funding for Futures Discord tomorrow and the YouTube. So you can join us on either or. All right? Bring your questions. Tomorrow I'll answer all those questions that were not answered today. And hopefully you'll make some money. You understood about the breakouts, how to trade the trending markets, and all that jazz, right? So the easy trades will be not gold right now. The easy trades will be NASDAQ. If NASDAQ closes above all-time highs today, it's rock and roll for the next 2 weeks. Okay, just buy and hold. I shouldn't be giving. This is not a financial advice and blah 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 blah. Don't be a jerk off and then but you said this that. No, don't do you. Do your own analysis. But to me, if we have a close above today's all-time highs, we close on the all-time highs, I think we're going to have a follow-through in the days to come, because we no longer have any pertinent news for the rest of the week that will be more important than this, and this kind of paints the picture of what the fuck is going to be happening for the remainder of the week. All right? I'm glad to be back, baby. I'll see you all tomorrow. Cheers.